With the B-book model, you essentially can make up your own conditions. You can put all your spreads down to zero. You can give people instant execution, or on the other side, you can turn the slippage dial and delay execution. So there are all these nasty activities and tools that brokers use.
So the A-book model, you basically connect to another broker who's giving you a fee. Now, could that broker be a B-book broker?
So another true telling sign of an A-book broker is that there is always an inherent amount of... You can have someone like a Nav Saro who comes in and spoofs the market. What he did was he put 30 or 40,000 orders into the market to sell the S&P 500. Those never executed because he pulled them right at the last second. But what happened was the market saw those orders coming in and automatically kicked everyone's algorithms to short the market. What he did, as soon as the market dropped, he bought it and made huge amounts of money. So that's called market spoofing. You do, in the broker startup space, have a lot of scams as well. So it's important to note that, especially in the unregulated space, the difference between that unregulated structure and a regulated structure is that...
Have you ever had it like, at Blackbull maybe, or just experience in general, where the spreads widen significantly and it's not just a news event, it's just a random sort of like uncontrolled event where spreads gone up 25 pips for no reason? What would be the reason behind that?
Generally, they're fat fingers. You'd get an occurrence maybe once every couple of months where someone at a bank, instead of pushing, 1 million, they push 1 billion, for example.
Right. Just talking about that rollover, I mean, what about the high spread time that happens after that? I mean, can you explain that? Is it just because it's too easy to trade those opens, or?
No, I mean, so what happens is banks actually...
Folks, we welcome Anish Lal to the show today from Blackbull Markets. He is one of the directors over there. He's got tons of years in the Forex brokerage space, and you guys are going to get to tap into all of that in the next hour. So we go into everything, talking about A-book, B-book brokers. We even go to prop firms. We go into liquidity providers, spreads, slippage, all that kind of stuff, what you need to watch out for so you're not scammed, and everything else to set up your own Forex broker firm. So, folks, that's coming up. It's an amazing interview. It's a must listen to for every single trader out there. Now, other things going on here, we've got the mystery trader hitting the Telegram channel. We're having a great winning streak, so go and check that out if you haven't already. We've also got the live streamers hitting London and New York, so make sure you subscribe to the YouTube for that. And we've got the Blue Guardian Challenge being taken by a few traders, including myself. So if you want a 10% off coupon, remember you can get that using the link below this video or in the podcast description. And whilst we're talking about offers, remember you've got the Trader Keys Plus merch pack, 10 being given away by Blackbull Markets, my sponsor, and who Anish works for as well. So that's all available with that Trading Nut, unique Trading Nut link below the video. And you do get that deposit bonus as well if you're trading on the MT4 and MT5 platforms with Blackbull. All right, folks, enough from me. Let's dive into the show with Anish. Our sponsor, Blue Guardian, is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation. All right, folks, here we are on Trading Up with Anish Lal here in the house, all the way up there in Auckland, New Zealand. So finally, somebody else in the same country now. He is one of the directors at Blackbull Markets, who are also a sponsor of the show. Welcome to Trading Up, Anish.
Thank you, Cam. Thank you for having me. It's a pleasure to be on the show.
Yeah, well, look, it's good to get you on the screen. I know we met in person last week, and today you're basically going to break down how you can set up your own brokerage firm. So what it takes to do that. We're going to touch on the broker relationship with prop firms. We're also going to touch on what how retail traders, some things retail traders may not know about how brokers work and some of the things decisions they make in the background, which will affect their trades. So to start off with, Anish, I mean, do you want to give us all the listeners an overview as to how you got into the brokerage space, and I suppose a bit about your history and knowledge to date?
Yeah, thank you very much. I've actually been in the industry on the broker space since 2011, so going on to 12 years now. Started off working actually with binary options way back when binary options were just starting out, and then quickly learned that it was definitely pretty sketchy, and then worked with some uh, some professionals from the banking and investment banking world to set up a white label broker. So we were actually one of the first white labels for a company called Dukas Copy Bank, who are based in Switzerland. And they used, back in the day, the FOREX platform. And we started a broker, an FCA regulated broker in the UK, 2012, launched in 2013, August, for that. So I was heavily involved in understanding the regulatory requirements at that time, which of course 10 years ago now have changed dramatically. But at that time, to set up what was required within the UK regulatory environment, the company setup, the banking setup, compliance landscape, and dealing with liquidity providers. So from a very early stage in my career, had some interesting exposure to all those aspects. Following that, of course, you're heavily involved in what it takes to build a broker from pretty much scratch, and the costs involved with that. So over the course of those 3 years, I was involved in that, and through that 3 years initial part of my career, I helped a number of other brokers to get set up as well. So we would offer. We got to a stage at that point when we had our own server, and by having your own server, you could offer at that time white labels, and we had quite a lot of interest from people around the world looking to set up white labels. And ironically, Blackbull was one of the brokers at that time. So a year later, we assisted with liquidity relationships, and then I came full circle a couple of years later. But after the initial broker that we set up, I joined ADS Securities in London, and again through that had quite a lot of exposure to how liquidity works, execution at the top end, dealing with investment bank counterparties, a lot of dealing, I guess, on the risk exposure. So quite a lot of well-rounded, I guess, a 360 base of knowledge for the brokerage world. And over the last 7 years, been fully involved in the growth of Blackbull markets as well here. So that's probably myself in a nutshell. And I guess through that entire 10, 12-year space, been able to pick up quite a lot of valuable knowledge points. So for people that are now looking to set up their own, or look at even just the idea of setting up their own brokers, if they can use this bit of content to learn from. Yeah.
Brilliant. I mean, it's going to be really interesting to find out, like, not just how you set that up, but some of the other aspects along the way, like, you know, liquidity providers, how do they work, and in conjunction with the broker and the price feed that everyone gets, that kind of stuff. I mean, to start off with, I suppose, who would be the kind of person that would be looking to start up a brokerage firm in this day and age?
Yeah, that's a really good question. So I think what you find is that you start off, I guess everyone starts off with an interest in the financial markets. Then more creative, influential people, especially in today's age of social scoring. I mean, social media influencers who have large trading communities, or introducing brokers, big affiliates who grow their audience over time, generally have an interest in progressing their business development generally, and how they can use their influential power into a space of marketing a product. Brokerages is sometimes the ultimate goal, because brokers, you know, even though they carry a huge element of risk, depending on how you run your business, they can be quite the profitable machine. So just as a benchmark, right, in the years 2018 to 2022, IC Markets were top 25 tax-paying authority in Australia. So
Wow.
just think of how big Australia is as an economy with all their different industries, and IC Markets slotted right in there. If you look at but these are your top tier brokers. IG Index is worth over $1 billion. They've been a publicly listed company, one of I think in existence since the 70s as a broker, and then they ventured into the CFD space, were kind of pioneers in the spread betting world in the UK 15 years ago, and really made a name for themselves. Plus 500 also venturing on $1 billion valuation. Same with CMC Markets, over $500 million as well. So there is that golden egg at the end of it. But over the last 15 to 20 years, there have been thousands and thousands of brokers that have entered into this space. If you go to a website called 100forexbrokers.com, it will give you pretty much a list of all the brokers in existence that have a license. And I think the number ventures into 2,000 or 3,000. So
wow,
you're looking at that many brokers that essentially are offering you the same product. So as an end consumer.
And how many like clients or deposits do you would somebody need to make it, I suppose, a viable business model?
Yeah, so
looking at getting into it.
That's quite difficult to answer, because everyone would have their own cost base. I mean, if we start right at the beginning, if you're looking at a broker today's world, just to break through the noise, you've got to look at who you're dealing with, and if you're wanting to offer an MT4 or MT5 platform, your compliance check only goes through MetaQuotes. Now, if you've been following the MetaQuotes journey over the last 2 or 3 years, 2 years specifically, especially since Russia has been in the spotlight, and MetaQuotes are a company based out in Cyprus. They've been in Cyprus for 20 years, and they essentially have ultimate power there. They're the ultimate data provider, a technology provider with huge amounts of data. But they had an issue with their app, and they came under pretty heavy scrutiny from the powers that be. I'm not too sure who those powers were, but they had a lot of issues with how they handled their compliance. So they had a complete overhaul recently of changing their business model and how they offer their products and compliance. So as an example, brokers who had a St. Vincent license are completely on the blacklist now. Not only do you have to consider what is an acceptable company that you can incorporate in for MetaQuotes, but your payment providers and your banking relationships is the next most important thing. It's all well and good incorporating your company in an offshore jurisdiction, which has very little to no regulation, but the reality is you will not be able to get a tier 1 bank account, and you won't be able to work with payment providers who can offer you Visa, MasterCard, payment processing, or even crypto processing. You're pretty much limited to very high risk processing partners. And generally what happens, you get waves of high risk processing partners who go bust. So a lot of brokers who start out, if they've started out by registering, I don't want to name names, but we can name jurisdictions. You've got, for example, St. Vincent being one. You've got islands like Vanuatu, which a lot of brokers have used. You've got the Comoros Islands. You've got the Maldives, Mauritius. Mauritius, to its credit, has increased over time, but there are a lot of these unique luxury places where people look at registering in, because the setup there is relatively low cost, and you can get what's called a financial license that was considered appropriate for MetaQuotes to approve. But now MetaQuotes pretty much turning the eye on that. and payment processes won't allow you to integrate.
Folks, Blackbull Markets have 10 merch packs to give away to clients who sign up before the end of the year, including one of these trader keys. So to go in the draw, all you need to do is sign up with the link below this video or in the podcast description, and you'll go in the draw to win. It's that simple. And remember, folks, when you sign up to Blackbull Markets through the Trading Nut link below, you're going to get a 100% deposit bonus up to $1,000 on your first deposit. All you need to do is click the link in the description below the video or the podcast. Right, so it's very difficult to. So I suppose stepping back a step. So what would be step one in setting up a brokerage?
Okay, so step one is to firstly look at. Okay, you have to have a business plan, and to be well researched. The idea is step one. Look at where you want to incorporate your business. It has to be a respectable place, and you've got to look at what regulatory requirements are needed for that country you're incorporating it. For example, the Seychelles. The Seychelles, the regulatory body there is the FSA. The idea is to go directly to the source. Try and avoid third-party consultants that you would find all over Google. Help me set up your broker, or you get so many of these people that essentially just break down information that you can get right from the source. So you'd want to go to the company registers of these specific country, say the Seychelles, look at a company registration, then look at what's required to have a financial license. So the first step is to do your research and to pick a country that is not on the blacklist. Now, how do you find what countries are on the blacklist? There is a website called kycratings.com, which we can put in the description if you like, or share with you. But there is a list of generally countries that have strong AML and CFT requirements. What that means is the reason why payment processors, banking partners won't work with you if you're registered in a very boutique location is because of the AML strength of that particular country. AML's anti-money laundering and CFT. So essentially, they're looking at how strong is the country that you're working with. Now, if you're in, we're going on the assumption of this last bit of chat on a very low cost setup. So low cost setup generally means registering offshore. Yeah. There is, of course, also the option to register, say, in tier one jurisdictions, like a European jurisdictions, an Australasian jurisdiction, or even a Middle Eastern jurisdiction now, which is quite popular. So that is what we've been talking about is a low cost solution. But yeah, so you can also choose to look at registering and incorporating in the UK, for example, or in Australia, and using ASIC. So first step, decide what your budget is. Now, generally, if we're looking at cost, when I say low cost, as an example, if you were looking to set up in the Maldives or the Mauritius as an example, you'd need to set up a company there. And not only do you need to set up a company, but you need to hire people on the ground. So generally, when you set up a company, you can hire you would need a compliance officer, you need a director. The cost for that on an annual basis could start from 20 to 30K USD just for your company setup. And then you're looking at a regulatory license, which if you go directly to the regulator would probably be between 10 to 15K per annum, including reporting costs, requirements for reporting, audit, etc. So that's your baseline cost for running your company in that jurisdiction. And then you've got to look at getting a bank account through all that process and working with PSPs. It's your main thing to tick off.
And it's payment service providers?
Yes, exactly. So companies like PayPal, for example, they won't work with brokers. So you've got to then look into merchants who would work with high risk processes. So that's again part of the challenge. They're out there. There are companies and technology providers that can assist. But yeah, that's basically your first steps.
And to me, it sounds like, I was going to say, it sounds like it's kind of high risk to try and do that if you're going to do it. And given the fact there is, a blacklist, and things have been added to the blacklist, countries could be added to the blacklist that, I mean, most, you sort of know that there's, I suppose, some solid countries around the world. Usually they've got, currencies that are being traded in that. Yeah. But I suppose at any point in time, if you go Maldives, that could be added to a blacklist for whatever reason. If you go with this payment provider, that could be shut down for whatever reason. And then you've got like these guys that you're paying, every year. I mean, so how would somebody navigate that? Or is it just one of these sort of risks that you need to take?
Exactly. So it's kind of a calculated risk that you're taking in order to secure your corporate structure. So first thing to look at is your corporate structure. You could have multiple corporate structures as your business grows and create multiple different entities that face perhaps a global entity. But we're talking about, again, through this, a low cost scenario. You've got the low cost, I would say, and you've got the top tier costs. And the cost comparisons are huge. So an FCA license, you'd need probably £350,000 sitting on your balance sheet. And it probably cost you up to £100,000 to set up. So just as a reference point, that's the price points that you're dealing with for setup. And when we're talking about FCA as an example, you've got filing costs, you've got application costs, compliance, legal costs, all of that involved, and it's a lot more stringent. But if we go down the low cost route, once you've got your corporate entity set up, say you've then got to look at setting up your website and your portal. Now, there are providers out there that provide you kind of like an all-in-one solution. So I'm sure you can find them online. There's quite a lot of them. Or if you go to some of these expos around the world, the IFX expos, they would have booths and stands, and they're actual service providers that provide a service that would assist you from once your entity's set up, setting up your portal, finding your liquidity providers, etc. But the main next step is getting a brand ready. You've got to find a name, find a brand identity, and build some content on your website. Once your website's done, you find a client portal. Now, you can either build your own client portal. When we're talking about client portal, it's the back-end technology that clients will use to fund their accounts, to withdraw, a secure area. Just as a reference point, we built our own technology, but we've come over a period of time to get to that stage. At the beginning, if you're going for a low cost model, you'd want to use a third party technology provider. And there is an element of risk there as well, because, you're sharing your data with someone else. But you're hoping for trust, you're hoping for confidentiality. So those client portals could range anywhere from $3,000 to $5,000 a month, just to pay those technology provider costs. But through that, you have a portal that you can integrate in your website, clients can use and connect into their platforms and API and their account information. Once that's all done, you need to then approach MetaQuotes and apply for essentially a license. Now, at this point of time, MetaQuotes have two options. They have what's called, I believe, a white label solution and a main label solution. So gone are the days where you can actually purchase your own server. So they've moved away from that model, and now they're charging you up to a certain number of accounts. So their tiered system essentially starts from about $7,500 a month.
Really?
Yeah, which is quite expensive considering it was $2,000 a month for the platform, mobile and web, as a white label 3 years ago. So it's jumped up quite significantly. I think it's in response to the demand and the additional compliance requirements. But essentially, $7,500 a month will get you up to 1,000 accounts. Now, if you're a broker, you can quickly exceed that, and then up to, I believe, 5,000 or 10,000 accounts, you're looking at a fixed price of 10,000 a month. Then you've got an enterprise solution, which above that goes up to about 12.5 to 15,000 pounds. Sorry, we're talking about US dollars. Replace my numbers with US dollars per month. So if we add all of this up together, these are just your costs before starting your business. It can accumulate pretty heavily. So if we're looking at the company formation, your website creation, your portal creation, hiring even some support staff, we got into that, and getting your MetaQuotes license, you're looking at an annualized cost of anywhere in the range of 200,000 US dollars to 250,000 US dollars with a low cost setup. And that's with, assuming no marketing costs, no other systems being plugged in, CRM, etc. So those are things that you have to consider before even starting. So the first decision, to go back to your question now, is, do I have a budget and enough to start that we're talking about a minimum spend. So you've got to need some capital. Whether you're working with a team, a business partner, you've got to have some capital and industry know-how to start in this space.
Yes, it sounds like it is. I mean, I back in the day, I just remember, because I've been, using Forex brokers since even earlier than when you started. I mean, it was like 2007, I think. It was 7, 8. And back then, I remember somebody reached out to me and said, "Hey, I can set you up with a broker. It's only going to cost $1,000."
Yeah.
And they were going to be able to set me up, and it was all like, and I'm like, I'm not interested. But I mean, it's obviously things have moved on, and there aren't as many brokers around. I know New Zealand even had like dozens and dozens of brokers here, and then all of a sudden they cleaned, the regulations changed, and everyone left. So
that's right. It's
got much, much harder. I mean, do you want to touch on the ones that aren't using cash and are using crypto, and how that works, and any differences there that you would see?
Yeah, I mean, just firstly, for cash deposits is a complete no-no with any regulator. However, there are still some brokers that exist, and we won't name names, but in some parts of the world that you go up to their office with a bag of cash, they'll put it in your trading account.
Right. Okay. Right. Yeah. So you can't do it. You can't even do a cash deposit now.
I mean,
it makes sense.
Basic AML requirements that brokers have, you can get your bank account shut down very quickly. Unless you have a team of staff that like to accept cash as salaries, there's no way else a broker can use that. As soon as you put that in your bank, you'll get questions now, and you'll likely get a flag on your account. But crypto has completely changed the game in the last 5 years for brokers, because they can now use that as a payment tool. Now, the regulatory space for accepting crypto deposits is quite gray around the whole world. So what that means is that brokers can now take advantage to access countries that have payment sanctions, or have more restrictive payment processing into brokers with their usual Visa, MasterCard. They can now use crypto. So I would say it's been advantageous, because it not only is it an instant transfer, it's quite secure, very transparent. The only thing now is, how do regulators start to look at regulating that space? In New Zealand, for example, crypto in general is still on the blacklist, but I think it's more of an understanding issue than a policy issue right now, because they're still trying to think of AML and CFT policies that go behind it. For example, nowadays, I just saw a news story that you can walk into Ferrari in the UAE, buy a car in crypto, have it delivered the next day. Now, that works extremely well in the supercar space. I'm sure they have AML CFD reporting requirements there. But I mean, for us as a brokerage, if we were to receive $1 million in crypto, we've got to have some sort of idea of how that client generated that $1 million. So it's all well and good accepting crypto deposits, but how is your compliance backing? We're pretty stringent here, where anything over a certain threshold, there has to be a trigger. And it's also a good sign of what broker you're dealing with. If they're asking you how you made your money, it shows you that they have a level of AML CFT requirements that their regulator has imposed. Essentially, they would get in trouble if they're accepting money from things that have been funding terrorism, or drug money, or anything that's quite shady. Because as you know, crypto is a space that also has a dark underbelly, and it's quite difficult to pinpoint exactly where wallets are tracing and where money's coming from, and the outflows due to wallets dispersing and going into multiple wallets at a time. So it's quite difficult to track where things are coming from. But we'd like to have, I guess, as the crypto space and the whole blockchain industry advances, I think there'll be a bit more transparency over it. I guess that's the main issue brokers are facing at the moment. Yeah.
I mean, I suppose I'm sort of thinking of the brokers that don't actually deal in any that only deal in crypto. And they're what you call or people would call an unregulated broker. And they're probably set up in the St. Vincent or somewhere like that. So they managed to get around the regulation. They may not have got around MetaQuotes because they're obviously using MetaQuotes. They got crypto. They're in an unregulated environment. They don't need to get the payment processor in place. I mean, what would a landscape look like to start up that kind of broker?
Okay, so essentially, you are taking on a level of risk, because you'd have to deal with either a shady crypto exchange, because you'd be accepting deposits, and you'd have to process withdrawals from your crypto wallet as well. And not only that, you'd have to find a solution of how do you convert your crypto into cash or crypto into fiat. So there is also another part of that, I guess, conundrum is, okay, it's all well and good accepting crypto and withdrawing by crypto, but how do I turn that into fiat? And then you've got to find someone else that will turn it into fiat for you. And that guy could be operating on the gray side of things, and they might take a 8 or 10% cut to give you the cash back. So there's definitely a risk involved in that. How do you set that up? Well, firstly, I guess now MetaQuotes' compliance stringency increasing might be difficult for you to get past that line in today's day. But say, 5 years ago, you could probably do it. You'd set up a St. Vincent company, little to low cost, probably a fraction of what we talked about before. You'd get your MetaQuotes white label license, and you'd set up a crypto wallet. You'd give people the crypto wallet address. They'd deposit into that, or the clients would deposit into that crypto wallet address. And essentially you'd run your business that way. But how the longevity of that structure is heavily in question. You do, in the broker startup space, have a lot of scams as well. So it's important to note that, especially in the unregulated space, generally, people are looking just for a quick payday. You see a lot of brokers go bust. There's no way for clients to hold that broker accountable. There's no way to get your money back because there's no investor protection scheme. There's no accountability to any regulator, no way to see their office. There's no way to call that broker and contact them. They could just go wipe off the face of the planet. As you've seen, again, not to name names, but there was quite a big broker recently that had almost $500 million worth of client assets, mainly only accepted crypto, accepted clients from the US, accepted clients from Canada. Of course, in order to do that legally, you have to be NFA registered, etc. So they were operating in a very gray to black zone, where you're not supposed to be in, offering managed account services, etc., for unregulated money managers, and went kaput one day after a pyramid scheme came in and attacked the business. So how do I find if you're a client of that broker? What do? You can't do anything. And I'm sure there are people probably listening to this who might have had bad experiences in the past where they've lost money. So unlike, for example, Alpari in 2014 during the SNB crisis, as another example, of course, was Swiss Bank, February 2014-15, they removed their peg against the against euro. Currency moved about 15% actually on the Swiss franc, and a lot of people got stuck or went into negative balances. But what and Alpari went bust, I believe. So some people made money, but how do you get that back? Well, the FCA, they were FCA regulated. So the difference between that unregulated structure and a regulated structure is that you can then go through a process with the ombudsman and the FCA to get your money back, because they'll protect you up to a certain amount. I believe £50,000 in the UK.
Yeah, I do remember that, because I did have some, like, I had a few dollars in there. I think it was $7 or something, or £7. And I remember they actually sent me all the details to get the money back and all this sort of stuff. And I was like, oh, okay. Oh, and I wasn't that interested in it, but okay, yeah. So that's interesting. I mean, talking about I suppose step 2 and sort of like that going, the getting into the real nitty gritty. You've got meta quotes approved. You've got your sort of back end set up. I mean, what's the step after that?
Yeah, well, then it's get to business. How do you look at? You've got to look at, firstly, I guess, what markets do you want to attack? Now, you could go after everyone and spread your net far and wide. The reality is it's quite difficult. My personal opinion would be to look at regions that you'd want to focus on, and then look at a strategy for how to target them. You could, if you're, for example, from, just as throwing it out, if you're from Malaysia and you're setting up a broker based in Malaysia, regulated there, you might want to start with Malaysia as your home base. The idea is to build a base of clients. And the easiest way to do that is to target specific regions rather than multiple. For a very new broker, it is quite difficult to attract clients because your brand is quite new, and generally brokers do well over time because their brand reputation is increasing over that period of time. The more lengthier you have survived in this industry, the more likely you are to attract clients, because I guess it's a telling sign that you've been around for a while. However, saying that, every broker has to start somewhere. So the strategy would be to look at investing in marketing. When I say marketing, I mean, you could look at social media, of course. You can look at doing events on the ground, getting your name out, working with PR agencies to get your name out, or working with people in the influencer space to look at marketing partnership arrangements with these types of people. It is quite difficult. Unless if you've come from the broker space and you have a loyal group of clients or partners that would also work with you in the future, that's also a way to kickstart it. But essentially, it's quite tough because you're in a saturated market, and marketing, you need to, as well as looking at company costs, where we talked about that figure earlier, you've got to look at your marketing costs as well. And how much are you willing to spend to acquire clients? What does your cost per acquisition look like? So that's the next step. But actually, right even before that, we can go after that actually, is looking at your liquidity provider. Before you've even started to market your business, you've got to look at setting up with an LP and choosing your decision. Now, the reality of this industry, I think it's, it might as well cut through the BS. You've got your A book model and you've got your B book model. It's got to decide what type of broker do you want to be. Do you want to be an A book broker? meaning you're not taking the risk on clients. Everything is going to the provider that you're working with. Or do you want to be a B-book broker, which means you internalize everything, which means every single trade that a client places, you're essentially the opposite party to that. Now, depending on if you're, say, an FCA regulated broker, you need a special license to actually market make. So there is that regulatory aspect to that as well. And that does provide a level of transparency for clients. But say you wanted to go down the A-book model, you need to go find a liquidity provider. That could be a broker like us, for example. That could be, another broker that you find, and you generally contact them and you'd negotiate costs. You'd look at their pricing. The idea is, again, to do a period of research, broker to broker, which has the best offering for you, the lowest cost. Now, brokers would charge you a cost per million, which essentially means 10 lots per side. So, for example, a broker could say, hey, yeah, you can trade with me. You can send your flow to me, but I'm going to charge you $20 a million, which some LPs start with. $20 a million is basically $4 per lot. So that's your cost base as a broker. That means now you have to decide, what am I going to charge my clients as a commission? So depending on how much you want to make and considering your cost base, you've got to make those commercial decisions before that. Now that's an A-book model. And then you've got your B-book model, where basically you'd need a pricing engine. So you'd still need to approach a broker to get pricing. And brokers would have what's called a data subscription. So you'd only subscribe to their data. Through this process as well, you need to approach a bridge provider like a Prime XM or a 1-0. Essentially, that bridge provider bridges their pricing and their tech from broker to broker. And that, again, has a cost involved. Your data subscription has a cost involved, etc. So the B-book model would be, I guess, more profit potentially, but huge amounts of risk. And it could put you out of business straight away if you don't have enough capital. With the B-book model, you essentially can make up your own conditions. When you see brokers, you can put all your spreads down to zero. You can give people instant execution, or on the other side, you can turn the slippage dial and delay execution. So there are all these nasty activities that and tools that that brokers use on the B-book model. But essentially, once you've made a decision, A-book or B-book, you then proceed with your marketing.
So just on this, just sort of like in my back of my mind, I'm going, so hang on a sec. So the A-book model, you basically connect to another broker who's giving you a fee. Now, could that broker be a B-book broker?
Potentially, yes. Potentially, they would be taking the other risk, or they have a very sophisticated risk team where they risk manage the flow. Now, the important decision there is that you're facing a broker that is well established, or is essentially what's called a prime broker. So you have prime brokers out there that only service is to provide liquidity to newer brokers setting up. And they are well established in that space. They would have risk teams that would manage flow. They would work with the new broker setting up to help them understand what type of flow is coming through. But as an A-book model, you essentially have no conflict of interest with your clients. You're looking to give clients the best possible outcomes. And once you've established one LP relationship, you then have the experience to establish more. So there's nothing stopping you as an A-book broker from having multiple LPs on your other that you're facing. So during those negotiation discussions you've had, you can set up as many as you want, depending on how much you can pay for the data in your budget. Yeah.
And so would you ever like go direct to a liquidity provider, like somebody who wasn't, I suppose, Because I'm guessing there's somebody connecting to essentially the banks, I'm guessing,
No,
where
exactly.
the currency.
Yeah.
So yeah, would you ever go direct, and how would you do that?
Yeah. So you could go direct. So now when you set up with a liquidity provider, this also adds to your cost base and your budget, what you need to budget for. You need to put X amount of margin down. So a lot of LPs have minimum margin requirements. What that means is you've got to put, say, 100 grand down to get started, and you've got to keep that at all times as a capital reserve in your account. Because essentially what you're doing is you're matching your client balances with your LP account. You've got to look at what leverage they offer you as well. So if they're offering you 100 to 1, and you're offering your clients 500 to 1, you're essentially taking 5 times the risk.
Right.
So if you wanted to de-risk that completely, you would offer your clients 50 to 1 or 100 to 1. So you've got to look at all these, the margin requirement side of things as well. It's quite complex. I know it's quite difficult to fit in all in an hour discussion, but during this LP choice decision making, you've got to look at all these variables: pricing, spreads, leverage. What are they offering you? And then you make your decision commercially for your business, how you want to set up your account types, your commission groups. You go into your MetaTrader administrator server and you set up your commission groups accordingly, as well as different currencies that you want to offer. So it's definitely quite a lot to that whole setup process. If you're not experienced in that, you definitely should lean on someone with experience to assist you. But you don't want to go then with the naive angle of it, that it's going to be a get rich quick scheme, because as we can see, it's a lot of moving parts involved in it. You've also then, as an added layer onto that, you've got to make sure the liquidity provider you're dealing with is reputable, because there have been cases over the last decade where liquidity providers have gone bust.
Right.
So you have just a amount of layers of counterparty risk, whether it be your technology providers that provide you with your client portal, whether it be your liquidity providers, whether it be your own staff, the company that you've set up offshore, MetaQuotes. It's just all these moving parts that operationally, won't let you sleep at night. Essentially.
Exactly. And so I mean, just to get my head around the liquidity provider thing. So could you, if you had multiple liquidity providers, can you tap them all into MetaTrader so that it comes across as one price feed?
So
and how do you do that?
So there is a tool that PrimeXM use. PrimeXM is a bridge provider, and they have what's called an X-core system. Now, just to break it down, it does essentially that. So it's all well and good showing zero spread, but the matter is execution. Even though you're showing me zero spread, when I trade, I'm going to actually get executed at a wider spread. So you've got to be transparent there. But if you wanted to price in symbols from different liquidity providers, you'd use what's called an X-core system, and you would configure on the back end with the bridge provider. Say you wanted to take euro dollar from LP1 and pound dollar from LP2, you can customize your own pricing feed to do that. But the important thing is, if you're a book and your clients are trading on pound dollar and euro dollar, you've got to have enough margin at both liquidity provider accounts as a broker to ensure that your trades execute there as well. Now, how to find out your margin ratio and what's proportionate? Just as a benchmark figure, say you've got $1 million in client equity. So total number of client funds and deposits is $1 million. You've got to have a 1-for-1 at the minimum with your LPs. So you've got to be able to, you have to park that your client funds with your liquidity providers. As a business, that means then how do you make your money? Well, you've got your cost from your liquidity providers, which say was $4 per lot as an average. You're charging your clients $10 a lot as an example. So your end profit is $6 per lot. So as your commission, and then you've got to have a daily, depending on what regulator you're with or how your company is set up, you've got to have some sort of daily report. The FCA, for example, under ESMA, have reporting requirements that every day you need to report your client balances. So you need an export of all your client balances. You need a balance at your LP account. And then basically your LP account minus your client balance account is how much revenue you've made on the day.
Right. Okay. Yeah. Right. Okay.
Yeah,
So it is complicated. And
yeah.
In terms of like the in terms of Blackbull, so I know you guys have got we've just been awarded actually because I've done an ad for you. Fastest execution speeds in the world for any broker in the world, voted at the Dubai Expo, I think it was, and maybe a few other places. What does it take to get? I mean, I suppose I don't know if you're allowed to say, but how is Blackbull set up in terms of liquidity providers and are they using multiple? Is it just one? And how do you get your price feed sort of appearing?
That's a good question. So okay, firstly, to the execution speed part, how do you achieve fast execution speeds? Well, you need to have data centers set up. So during your MetaQuotes application, just as the setup example, you've got to choose what data center you want to set up at. Now, there are 3 major data centers around the world. There's New York, there's London, and there's Tokyo. There's also tier 2 ones, which I would say, which are also pretty good. Hong Kong, Singapore. Now, those just as an example, an NY4 in New York and LD4 in London, they are like the actual architecture of the buildings. They're like Fort Knox. You cannot go in there. I've actually been outside the building, and it's like a prison. Essentially, you just can't go in. And it's very difficult. I'm sure it's like a maze inside, but essentially that's where all the servers for the financial services industries are based. If you were, a subject to a terrorist attack or something happen, if anything should happen to those places, I mean, you'd have a dire consequence in the financial markets. Essentially, that's where all your banks hold their data. And as a broker, you would hire unless you've got your own server, you'd hire a server there. Now, it gets as complex as where you're located in that server room and how you're connected with your liquidity provider service. So, for example, if we're facing banks like JP Morgan and Goldman Sachs, and they're in X server room, you want your server to be as close to theirs as possible and connected by a copper wire. Like that's essentially how you achieve the best execution. Now, as a client, on the client-facing side, you want to also have a VPS that's based in that data center. So you've got 2 layers to it. You've got the trade flow. Client places a trade, then the broker has to execute that trade to the LP. Or to the multiple liquidity providers, and they've got to receive the trade back to the broker, which then goes back to the client. So there's that whole flow system, and through that flow system, the broker to the LP is that strength of that execution speed, or the rapidness of that, is what determines how far away you are from your LP or not. Now, throughout all this, you have market makers who could offer you absolutely instant execution. So another true telling sign of an A-book broker is that there is always an inherent amount of latency because of that flow. Client has to place a trade from their location. It goes to the broker. The broker has to execute it. The execution party then sends the message back to the broker, and the broker sends it back to the client terminal. So throughout that whole process, that's what you're measuring your execution up against.
Well, so what about like if for clients who trade on like a demo server, and then copy their trades across to live servers? I mean, how does that? How do you see that sort of impacting their execution based on latency and all that sort of stuff?
So generally, demo's instant execution, which means the strategies you're running on demo won't necessarily execute at the same price as the live account. So it's always difficult to practice that because you're going to get differences in execution quality, differences in pricing. Um, yeah, we haven't even touched upon this, but you've also got your demo server as well that you've got to set up.
Yeah, of course.
But yeah, because you want to be offering a demo environment so people can test your pricing. It's definitely quite a lot to the setup.
What is what is the demo sort of philosophy? Because you go to I've used demo accounts all over the place, and everyone's got every broker seems to have a different philosophy. Like some give you like ample data to test on, others give you like the last few months.
Again, that actually depends on your server capacity.
Right.
So, which again is a cost to the business, and you've got load charges on that as well. Now, just as an example, we have limited server capacity on the demo, but if we wanted more, we would have to buy a new server, which is probably about $60,000 to $80,000. The only advantage of that would be for us to give more tick data. So data comes in by ticks, which is a second. Basically every new price you get is considered a tick, and a tick could be a millisecond or a second. I mean, imagine storing all of that data for X amount period of time, and then you've got your minute data, you've got your 5 minute, 15, half an hour, 4 hour, etc. So you've got to store data for all those candlesticks, and it gets quite heavy. And there are some brokers out there, credit to them, that can give you, a 4-hour chart dating back to the year 2000, or, a 1-hour chart dating back 10 years. And that's phenomenal. But it all depends on your data capacity. So we would, I wish we offered more, but it's quite difficult to do that. I think hopefully that people can understand why now.
Yeah.
But essentially, it all depends on your data capacity. But on demos, I mean, it would probably go back a couple of years with us on a 1 hour, and then maybe 5 years on a daily, and then 10 to 15 years on a weekly.
And would you host your demo at the same same server location in
Yes.
Tokyo, New York, and
exactly,
London?
yeah. So our MT5 server is based in New York, and our MT4 server is based in London, and we've also got a failover server in Tokyo. So you also need to consider this: if your main servers go down, you have a failover server, and they could go down for any reason. There are rare occurrences where your server has issues, and you need to manually go in and reset it. You do it on via a VPN, of course, but that process could lead to data outages too. So if you didn't have a failover server, I'm sure you couldn't see online, historically, clients have had issues where there's no pricing on brokers and they can't execute, and you're like, WTF. The reason is that their server's probably gone down. It's either overloaded or it's not been reset in a while. Good practice is to reset your server every day at settlement time, which essentially is midnight 0000 on your server time.
Right. Okay.
So
And that's why some of the servers don't work in that 5-minute period.
Exactly. Yeah. Technically, your FX markets are closed during that time for 5 minutes while they settle, but that's called settlement time. So good security IT practice is to reset your server every day. And the reason is to clear any overloads. But I mean,
and what about just talking about that rollover? I mean, what about the high spread time that happens after that? I mean, can you explain that? That's always intrigued me as to like why you get this massive high spread. Is it just because it's too easy to trade those opens, or? No,
I mean, so what happens is banks actually pull their pricing from the liquidity pools. They stop. So that widens your spread. So there's only a limited amount of parties that are actually pricing during that time. The reason they pull their pricing is because they need a period of time to settle. When I say settle, that means, say you've had during that previous trading day thousands of transactions in multiple different currency pairs. They need to settle at a price. So when for their reporting and their P&L requirements and their reporting requirements, they've got to take one exchange rate, which is that last tick that you get at before the settlement time. That exchange rate is the one that they take, and then they do a whole load of reporting for the next 5 minutes, which mostly is automated. And then essentially their daily P&L or their daily settlement statements are based on that last tick that they get. So if they've had loads of, I know, yen traders and yen volume, they've got to settle that back into one base currency, which is generally US dollars if they're reporting in US dollars. So that's the reason that happens.
Right.
But, that being said, if you trade during that time, that's why you'd get huge spread blowouts. It's very difficult to trade at that time. Some people have a whole strategy based at just trading at settlement time or right after it opens. And that's why also you get market gaps sometimes on FX, especially after the Monday open. But yeah, you get a whole bunch of out of hours trading.
And have you ever had it like at Blackbull maybe, or just experience in general, where the spreads widened significantly, and it's not just a news event, it's just a random sort of like uncontrolled event where spreads gone up 25 pips for no reason? And what would be the reason the reason behind that?
Generally, they're fat fingers. So you can see during order flows in the back end. Say even on a Bloomberg terminal or in the options market, you'd have a real abnormal, unusual event. And if you look at the execution logs on the trades going into the market, it's generally a fat finger. So, and it happens quite often. You'd get an occurrence maybe once every couple of months where someone at a bank, instead of pushing 1 million, they pushed 1 billion, for example.
Right. Okay.
And that happens a lot. So any unexpected volume or unexpected surge leads to those big spikes. You also get an element of insider trading as well. So there are cases that like Nav Saro, the Hound of Hounslow, back in 2018 when he spoofed the S&P 500. So there are people set up with very sophisticated automated systems at low volume times to trade. So during periods of low volatility, you can have someone like a Nav Saro who comes in and spoofs the market. What he did was he put 30 or 40,000 orders into the market to sell the S&P 500. Now, those never executed because he pulled them right at the last second. But what happened was the market saw those orders coming in and automatically kicked everyone's algorithms to short the market. What he did, as soon as the market dropped, he bought it and made huge amounts of money. So that's called market spoofing. Now, he was extradited to the US. And in order to get around his sentence, he's now working with the SEC to help them to fill in, basically a white hacker, fill in their plugs, as to prevent that in the future. Yeah.
Was that the one where it happened like the 2nd of January or something, where the price just dropped by it was S&P, wasn't it? Sorry, S&P. I'm thinking of the FOREX ones where it dropped 1,000 pips on like 2nd of January around about 2018.
Right.
And it was like out of nowhere, this humongous drop. 1,000 pips on a day that like everyone should be on holiday. And it was I can't even, somebody in the comments, please let me know what the reason was. Now we're going to sort of start wrapping things up here, because I think we've covered a lot. But one thing I did want to touch on was prop firms, and I know you're like broker party to at least one prop firm.
Yeah.
How does that sort of work for you guys, and what's your sort of view on that sort of stuff?
So I mean, I guess considering everything we've spoken about, it is, in summary, quite difficult, quite expensive, time consuming to set up a broker. So the prop firm space becomes quite interesting because you can kind of do a similar thing by offering a product and having a server of your own, but at a very low cost model. there is definitely a huge amount of risk involved in it, depending on how you run your business, because it could be as far as a stretch to say it's almost uh, you're running as a pyramid scheme or a Ponzi scheme. Essentially, you could choose that model, or you can be on the safe side. But we have seen, of course, an exponential rise in the number of prop firms coming out. It's the new craze. Wherever there's a little space to make money, people will find it. People will flock to it. But as we've seen with my Forex funds recently, they, in their report, have now highlighted prop firms as being, requiring regulation, essentially. And because I believe my Forex funds were taking US and Canadian clients, and that is a very gray space to be in, especially if you're a prop firm and you're essentially providing brokerage services. And they had $455 million seized. But just shows you how much capital they had in such a short space of time. And that's more than most brokers would have on their balance sheets, who have been around for decades. So it's definitely quite a lucrative space for a business. But I personally think that around the world, you probably start getting more regulation in place for that space. The SEC or the US regulators are generally first movers. Whatever they set will be precedent for everyone else. And then it could move into, people starting to regulate or incorporate offshore. It'll be interesting to see how it evolves as a business. But for me, I've personally seen on the client side a lot more people interested in taking up these challenges rather than going on a demo account, for example. They much rather spend a couple of $100 to trade on a high value account, because you've actually got more of an emotional attachment to it. You're able to practice psychology a bit better. And you can operate within set limits. And that's always, to create good discipline as a trader, to create more confidence and build a strategy. That is essentially what you want to be doing. So what the prop firms are actually inadvertently doing is creating good trader habits for a whole new generation of traders, which I hope personally helps to create and evolve the trader mindset and creates a generation of more traders that are risk managed, know how to use margin, trade size, etc. So I hope it's a good rather than an evil. And I do feel, though, you will see a lot more prop up. You will see a lot more go down because they don't know how to manage their business, or they don't have enough capital, and they won't pay out. But so you've got to be very careful with who you deal with.
So what about so you're partnered up with one prop firm.
Yeah.
Without getting you a barrage of people coming up to you and saying, "Oh, can we partner with Blackbull then?"
Yeah.
What's your sort of I suppose ethos around that, in terms of do you want to get into the space, or if people or prop firms are coming to you saying, well, we want to add Blackbull on, what's the thinking from your point of view?
On our side, we've got to really do due diligence on the company, because we've got to make sure that whoever works with us essentially has an element of carrying our brand reputation. So we've got to make sure they have a sound risk dealing model, a risk management model. So they've got to have some sort of experience in the industry. It can't be, any Tom, Dick, and Harry has just decided to set up a prop firm and continue in and offer challenge accounts, and it's quite a lot of risk involved there. They've got to understand somewhat about the IT and security space and the MetaTrader space as well. So we're definitely doing due diligence not only on the company but the people that are involved in that.
Right, so it's quite significant in terms of you're not just going to give it to any Tom, Dick, and Harry.
Yeah,
who wants to add you as a broker, which makes sense. Now, look, Anish, what haven't I asked you today that you think I should have and you want to touch on before we wrap up here?
I think we've definitely covered quite a lot. There's so much more that we can go into as much detail on each specific topic, but I think headline if you are looking to start up your own broker, there is, of course, a light at the end of the tunnel, and brokers can quickly grow. So there is, it's not all gloom and doom. There is a business case for it, but you would definitely need to trust the right people. I think even in that whole set up your own broker space online and the service providers you can deal with, there are a lot of people that have agendas that charge you an arm and a leg. You'd have to be very, very careful of who you deal with at the beginning. So I guess, want to let people know that hopefully you can see I'm quite transparent, and I'm happy to answer any questions personally that you might have if you're looking to set up your own broker. You've definitely, number one question is it right for you? Do you have the budget for it? And are you prepared to give it your all? Because it is a 24-hour business. You've really got to put your whole heart and soul into getting it set up. And but I hope that there are new players in the game, because you don't want to get to a space where you almost have an oligopoly in this industry. You want to keep it competitive. You want to keep brokers held accountable. You want to be, as a client, having the ability to spread your money around different brokers or have different options. So I hope there are still new incumbents into this industry, and I guess be careful who you deal with. That's my final message on that.
Well, look, it's been absolutely brilliant. And then what I do suggest is if you are listening to this on the podcast, jump over to the YouTube video and add your questions in the comments below, and we'll see if we can get Anish to answer them there, just to say people email him direct. He can answer all the questions in one place. So please drop a comment below the video, and we'll get him to answer the questions there. So look, Anish, thank you very much for coming on. Really insightful. I mean, I've learned a ton of stuff here, and I hope the guys listening have learned as well. I mean, if people are looking to jump on board with Blackbull, what's the best way for them to go about that?
Yep. So I would suggest clicking the link in the description below. You'd also now get a benefit of having as an incentive, 100% deposit bonus on your first deposit up to $1,000 with the link below. It's a special deal on the Trading Nut Challenge. So that's the best way to go about it.
Cool. And guys, you do actually, there are 10 merch packs to give away if you sign up before the end of the year. So if you do want to get like a merch pack, I'm guessing the cap's in there, and there's a trader keys as well, which I've got behind me somewhere.
Yeah.
And yeah, that's there as well. So if you do sign up, you got to use that link below the video. But folks, thanks for listening. Thanks for watching, and we'll see you in the next one. Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot. All right, folks, there you have it. Interview done and dusted with Anish. Now, do remember, you can get your hands on that trader keys and the merch pack if you sign up with Blackbull using the link below before the end of the year. So you've got to do it before the end of 2023. They've also got that 100% deposit bonus offer going on for Trading Nut listeners exclusively, and also there's a Trading View offer as well. So go and check them out over there at Blackbull Markets using that link below, because that is how you connect to all these exclusive offers. Now, last but not least, we've got the mystery trader in the Telegram. Go and check it out. He's having a great winning streak at the moment. We've also got the live streamers hitting the London and New York sessions. Go and check them out. And if you're looking to automate anything, then check out my Robot Builders Club. We're doing tons of cool stuff over there as well. All right, folks, enough from me. You have a great trading week, and we'll see you in the next episode.